Hey everyone, welcome back to another video. Happy that you made it back. I'm going to answer a question that most people who rent property in Dubai have. So hopefully this answers some of the questions that you've got as well. We all know that rental prices have skyrocketed over the last couple of months. If you are looking to move to Dubai, you're putting the value ratio into perspective and also noticing that the square footage that you get versus the rent that you pay is a bit unbalanced, and that is the reality in the market. We can't change that, and through this video I'm not going to be looking to change that either, but I'm going to share with you a question that my client sent to me this morning, and that was just after I had a similar conversation with another client who rented from me, and we did a viewing on the property because the current landlord wants to sell it, and the person who's going to buy it is going to be an investor. And also a phone call that I had this morning talking about property prices. So in this video, you're probably going to get a lot of answers to the questions that you have. So the purpose of this channel is to be transparent with you, to give you truthful advice about what's happening in the market and how you can take advantage, and also some perspectives that you should have looking forward. So this morning, at around 11:33, the question came through from a tenant who I placed in an apartment in Palm Jumeirah. Says, "Hi Cobus, how are you? I was wondering, ... What do you think of the housing market? Is it worth buying? Is there anything in this specific complex? What sort of place or price should I be looking at?" So he hasn't done much research. He's probably heard a few things, read a few things, and then I am the broker of choice. So I'm quite excited about that. So I said, "Hi Christian, this is my response. Hi Christian, thank you. I love this question. Let me explain my point of view. If you plan to be in Dubai for the next 5 years at least, you should buy." I did this calculation. So on the screen right now, you would see that I put in some figures. So that is the current rental that he's paying for a 2-bedroom apartment on the Palm Jumeirah. And that is the going rate for properties that sell that are exactly like his in that complex. So he would be able to buy the property that he lives in for 4.7 million dirham. Now, when you purchase, you need to put down a 20% deposit. And I calculated this mortgage loan period over 10 years. Now, what the comparison shows us is that after 3 years, it becomes better to own than to rent. And that goes back to the question that I asked him. If you are going to live in Dubai for 5 years at least, you should buy. Because majority of these calculations that I do, depending on what segment you are in the market, this won't be the case if you're paying 2 million dirham for a villa that is worth 80 million dirham. This won't be the case. But for this type of client with this type of property, he would save 1.3 million dirham over a 10-year period if he was the owner, versus losing in rental payments 2.7 million dirham over the 10-year period. Now, I also did that calculation over a 5-year mortgage loan period. So over a 5-year mortgage loan period, the rent stays the same, the purchase price stays the same, the down payment stays the same, but the mortgage loan period is less. And the calculation comes back saying buying becomes better than renting after 3 years. So even if you make that period shorter, saving after buying 440,000 dirham after 5 years, or if he keeps renting, taking into consideration the average rental increases between 5 to 7% per year, he would lose over a 5-year period if he keeps renting 1.3 million dirhams. So you tell me, what is better? Of course, the question that followed after that is, it's tough to say how long I will still be in the country, because the position that I hold, the business does require me to travel or move to a different city if they wanted to expand in that sort of that area. So my thinking, he says, is if that was going to happen, then this would be a good investment. So I said, yeah, exactly. Again, my response, that was my next point. If you leave in 2 years, you will sell and get back what you paid, or put it on rent. And it's another stream of income. It pays for itself. Building a nest egg here as well for your kids is not a bad thing. And his response was, yeah, that's what I was thinking about, ... So what should we be looking at in your opinion? So that opens up a lot of opinion and a lot of options depending on his risk aversion or risk tolerance rather. So what is your intention? Do you want to live in the place that you buy? Do you just want to invest and continue renting, which according to the calculations don't make sense? But what if I buy this and then I also want to invest? Well, over a year or two, depending on how the market went up, you build equity within your property that you own, and you can release equity and start investing in real estate like that if that's the business and model that you want to follow. See, there's a bunch of segues and options. Your options just open up if you actually own the property that you live in. I know there's a bunch of gurus saying, you know, the property that you live in is not a good investment. It's not an investment if you are paying for it. It's only an investment if somebody else is paying for it. And I sort of understand where they're coming from. But if you look at your long-term plan, possibilities, the opportunities within the suburb or city or country that you've done this in, it's different everywhere. But if you have a good consultant on your side, they will advise you to buy they'll advise you to buy the right thing and work out a roadmap going forward. So that's what I would do for this client. I had a second conversation today when we did a viewing, like I just mentioned earlier. The tenant said to me, maybe I should buy this place. What do you think? And this tenant has lived in Dubai for a very long time. They've got a successful business here. He says, but I'm scared because prices are quite high. So depending on where you're buying, so this is particularly to Palm Jumeirah, the conversation can go either way depending on the suburb that you live in. But the truth is, Palm Jumeirah, other than the crescents where luxury products are being developed, it's full. It's full. There's no other place to develop. So what's going to happen? What usually happens in the city that you are in, when there's no more place to develop it, the city has expanded to its max. Prices start increasing because supply to the primary market disappears. Now it's secondary market. Prices go up as long as there is a demand. And worst case scenario, you can just sell at the same price you bought it at. So at the end of the day, his thoughts are, okay, we ended the conversation with, okay, I trust you, let me know where I need to invest. I don't necessarily have to live there, because he also started speaking about other reputable developers like Ellington and their products and their locations. And we got into quite a lot of detail. So if you want to get into detail with me, the video is not done yet. If you want to get into detail with me, have a dynamic chat like that, then there's a link in my description that takes you directly to my calendar. That gives you 30 minutes in my calendar. Come with pre-prepared questions. Let's have a really dynamic chat about the real estate market. And if you feel comfortable after that, book another one. Let's continue talking until you have gathered enough information to make an informed decision to make your first investment or your second investment in this dynamic market. The third conversation that happened today was with a new client who came into the ecosystem looking for an apartment in either Maidan because it's close to where she works, or in JLT because that's where most of her friends and family live. So she wants to be close to her community, but also that gives her easy access to Sheikh Zayed Road to actually get to downtown Business Bay where she works in the mornings. She said, but I don't quite understand or know what to buy. What would be a good investment? When you're buying to live, it is more about the community. It's more about the amenities, the lifestyle. But what she also expressed was quality of the buildings. When she's going to buy something in the secondary market, it's going to be old. She's going to have to spend money to upgrade it, but then her unit is upgraded, not the entire building. So it's old building, services, etc. So I said, look, it sounds like your quality and something new would be better suited for you. She said, the problem is then I have to wait like 3 years before I can move in, 2 years before I can move in, which is the case. When you buy something off plan, you have the benefit of a interest-free payment plan, but you have to sacrifice something, and that is time. So you're going to have to keep on renting or staying wherever you're staying until that property is ready. And that property will then deliver on exactly what you want in terms of quality, in terms of style and lifestyle, and the quality of life that she wants. So something's got to give. Then we also spoke about prices. And this is an analysis that a client of mine came to me with and said, Kobus, if I look at what is on offer on the off-plan market and I look at what's on offer on the secondary market, price per square foot is pretty much the same. We're talking a difference of 80 dirham per square foot that the off-plan market in that specific development that we were looking at, it's 80 dirham cheaper. I said yes. However, if you're purchasing a secondary property right now, the appreciation is going to be slower than the off-plan property. So something that you're buying at off-plan at 3 million now could be 4.5 million in 3.5 years. But in the secondary market, if you buy something at 3 million now, it's not going to be worth 1.5 million more in 2 years to 3 years from now. It's just not how the fundamentals and the dynamics in the Dubai real estate market works, because where you're buying, it's a secondary product. That building is already 2-3 years old. So by the time the newer stuff hands over, this building is another 2 to 3 years older. So the sentiment around the product that you buy differs from if it's ready now and it's brand new to 3, 4, 5, 6, 7 years old. Secondly, what is your intention? Her intention is to move in. So something really nice in a new building in the secondary market could work. Something that Ellington or Emar handed over a year ago could work because she's not too worried about the appreciation. However, the other client is an investor and wants to make a profit in 2.5 years from now. And the likelihood of him exiting the property 2.5 years from now with a profit that is up to his expectation is skewed in a ready property. It's not going to happen that way. It's going to be best suited to his criteria and his goal that he has for investment to go with something that is the exact same price than a secondary, but the appreciation pace and cadence of the appreciation is going to far outweigh the ready secondary property. I don't want to get too technical. I hope that you found value in this conversation. The questions that clients ask us on a daily basis are questions that you probably also have, but just don't have anyone to talk to about. I'm that person for you. I'm your real estate mate. Everyone needs a mate in real estate. So again, there's a link in my description that you can book a 30-minute call with me. Come with your pre-prepared questions. Come to have a conversation about the dynamics of investing or living in Dubai. Let me help you. Let's help you make informed decisions. I'll catch you on the next video.